How are you guys? Hope everyone's doing well. Today we got a very nice surprise by Mr. J. Powell, and I'm so excited that we get to talk about it.
All right, good evening, everyone. Okay, if you can hear my voice clearly, can you type MU in the chat? Okay, MU is not micron, but market updates. Good to see every single one of you. Now, let me just make sure everybody. Okay, fantastic. I can see Kelvin is here. Xiuhui is here. Good to see. Okay, fantastic. Michael, wow. So lovely to see every single one of you. All right, so let me just meet everybody so that everyone is able to join us for this very insightful market update. Okay, how many of you are excited for that? If you're excited, can you type E in the chat? All right, because today is not just me, all right, I will definitely be sharing from my point of view how I analyze the market, but at the same time, I'm also inviting an economy expert to be here, and he will definitely be giving you a lot of insightful data points, as well as how you should be navigating in this market condition. Okay, I can see many of you are very excited. So now I'm going to share my screen and let me know. Okay, let me just share the entire thing first. Then to make sure that you guys can see my slides. If you can see my slides, can you help me to type S in the chat? Are you guys able to see my slides clearly? Perfect. All right, fantastic. Thanks, everybody. Now, let's get started for our market update for the month. So, I always like to do what we did previously so that you can have a very quick glimpse through of what happened previously and how has the market evolved until this point, right? So previously, when we last did our market update, that was back in early August, all right? I think it's on 12th of August, if I'm not wrong. So the data point that I captured was basically in early August. And previously, the market was pretty choppy, right? It was a lot of uncertainty. The market actually dropped quite a fair bit when we covered that. And at that time, if you still remember, Amazon was down like 16% and Nvidia was down 25%. So, and during that period of time, right, the market was actually extreme fear. How many of you still remember that? If you can remember that, can you type E in the chat? Okay, E stands for extreme fear. It was extreme fear. If you want to have a quick updates previously, you can go to my YouTube channel to check out the previous market update. But this is exactly what happened back then. It was extreme fear at that time, and so many stocks, extremely especially the tech stock actually dropped so much. So guys, did anyone remember what did I share during that time? So during extreme fearful time like that, during then, what should we be doing as investors? Anyone remember? What did we cover previously? During extreme fearful time, you should be exactly. You should be greedy. Okay, not nothing. Okay, you gotta take some form of action because the market was actually giving you some form of opportunities. All right. So if you still remember back then, all right, I actually shared that, hey, this is the best time to really look into some of the very stable ETF, right? And in fact, I also shared it inside my own private ETF community as well. I shared with them exactly what I bought during those extreme fearful time because the market is giving you a discount, right? Isn't it the best time to start accumulating more? And for those who are completely new to investing, that was actually the best time to get started as well, right? So then after that, the market has actually gone up since then, right? Because once again, there is no bear market forever. There's no extreme fear forever. The market will always start to like change in terms of directions. So what happened back then in the past 1 month, basically the market has actually gone up. So if you look at the S&P 500, which is the US broad market itself, it's gone up 7%. All right. So if you took action, how many of you took action since my last market update? If you took action, can you type A in the chat? Okay, how many of you took action that you actually seized the opportunity, right, together? All right, I love that. Michael took that. All right. Okay, Kelvin, you're waiting for the crash. I think sometimes, right, don't try to just keep on waiting because you really don't know when is the crash going to come, right? So you always want to make sure you just take some form of action whenever the market is giving you some form of opportunities. So I'm very happy that many of you actually took some action. Fantastic, right? And many tech stocks not fully recovered yet. Exactly. Okay, this is something very interesting. while the broad market has actually recovered, right? In fact, to right now, all-time high again. If you look at some individual stocks, for example, Nvidia, which is the screenshot I showed you just now, it went down, and then it went up, right? It went up 19%. And then with the recent volatility, once again, it came back down, right? So right now, if you compare to the previous market update, it still went up, all right? It went up about 6%, but not as high as the previous 19%, right? And the same thing happening to Apple as well, right? Even though it went up, but then it came down again, so went up about 4%. So if you look at it this way, S&P 500 versus Nvidia versus Apple, actually SPY has the highest gain, the most predictable gain, despite of all those uncertainty out there, right? So that's why I always feel that if you are someone completely new to investing, or you are someone that you really don't want to monitor individual stocks, what is the best way to invest? Guys, can you tell me? If you don't want to monitor individual stocks, what should you do? Exactly. You should look at the ET wave, the Arigato way of investing, which is just use ETF, right? Like no brainer, so simple, so easy. And then just over time, the market will recover, will go up. And yeah, another stocks that I talked about during my previous market update was Berkshire Hathaway. And just like what KK said, it has gone up a lot, right? Really, really up, right? So make sure when the market gives you opportunities, seize it, right? Take some form of action. You don't have to be very aggressive, just a little bit. Give yourself more confidence to get started. Okay, so can everybody type S in the chat? Okay, S stands for started, right? Just get started in whatever way that you can, and you will be rewarded over time. And the best way to get started is always ETF investing, in my opinion. All right, so yeah, so that's exactly what we went through previous month. So that was a very quick recap. So right now, right, how about the market right now? What is the situation? In fact, how many of you have actually monitored what happened to the Fed's decision? Okay, if you know what happened, can you type me in the chat? Okay, if you know what happened, because this meeting was a highly anticipated meeting. Everybody in the market, investors like you and me, professional investors, fund managers, they are all looking at this, right? Oh yeah, fantastic. I can see many of you actually stay up with the Fed's announcement. I love that. So what happened was, right, it was a jumbo size cut. What do I mean by a jumbo size rate cut? People were expecting, right, either the rates to be either staying the same or like a small cut like 0.25, right? But this time was actually a 0.5 point cut, right? 20, basically it's a 50 basis point cut. And you can see that, right, for the US interest rate, it has been hovering at a pretty high point since 2022, right? Because during COVID time, the interest rate was almost zero, right? Because the government really want to make sure there is a lot of liquidity in the market so that it can boost the economy. But because of that, right, there was a period of time that we went through high inflation. And to counter this high inflationary environment, the US government started to increase interest rate, right? Since like 2022, they have been increasingly adding on the rates so that to curb inflation. And for the longest time, right, our interest rate, okay, for the US has been staying up from like here all the way here. It's about 5.5%, right? This was actually considered pretty high as compared to what happened like 10 years in the past 10 years, right? And then finally, there is this turning point. Ding! It happened here, right? So there's a drop, and right now it dropped to 5%. Right, so basically the range was 4.75% to 5%, and the Fed also like predicted or anticipated that there could be more rate cut coming. So this is what we are waiting as well. So the thing is, right, what does that actually mean? For me, right, I'm not a macro economy person. So that's why tonight I'm also inviting this very, very lovely gentleman. His name is Ethan, all right? Yesterday actually was his birthday. Then we went out to have a birthday celebration, and he was sharing with me how excited he was towards Fed's upcoming announcement. And he shared with me some amazing insights, which I thought that it's something very, very useful. And that's why today I purposely invite him to be here as well to share with you guys his insights as well. All right, how many of you are excited about the market insights from Ethan. If you're excited, can you type E in the chat? All right. So, okay, super excited. Like, hello, Ethan. Wow, I love that. I love that. So many people are excited to learn from Ethan. So the thing is, before I bring up this special guest, right, I also have to do my own form of sharing, right? So that I can add value to you as well. So that I can share with you my insights and you can use it as your form of reference. Okay. So now, first thing first, right? Before we look at interest rate and all this, let's just look at the overall broad market in terms of the valuation. And one of the indicator that you can always reference on is the Buffett indicator. Can everybody type BI in the chat? Okay, BI stands for Buffett indicator. And the Buffett indicator basically is a formula using the total US stock market value, right? Divide by the GDP of the US. So if the Buffett indicator is very big, for example, right now it's 200%, that means the US stock market value is almost 2 times, all right, 2 times of the GDP, which shows that doesn't even make sense, right? The GDP is only so much, but the market cap, right? The total market cap is actually double of the GDP. It doesn't seem to be making sense. And that's why, according to Buffett indicator, this was actually strongly overvalued. Now, some of you may be thinking, okay, Chloe, okay, I understand this, but the data point seems a little bit outdated because it was dated back in June 30th, 2024, which is almost 3 months ago. Okay, how many of you felt that it's a little bit outdated? If you felt so, can you type O in the chat? A little bit, right? So now, the thing is, yeah, it's a 3 months old data, but I think one thing that you can always reference on is how has the market evolved since June 30th, right? So if you still remember right now, right, the market valuation based on Buffett indicator, it's all the way here. Okay, you can see historically it's the gray line, right? Historical trend line, that means this is considered fair value. But when it goes above like +1, this is +1 standard deviation, means slightly overvalue, to +2, which is extremely overvalue, which is right now where we are right now, right? So the thing is this data point even accurate right now? So what I did was I basically looked into the market situation plus the market price since June 30th. So if you still remember, all right, June 30th is around this point. Okay, I actually draw out already for you. So at that time, the market price was about just the S&P 500, right? Which the overall US broad market, $554, right? And right now, actually the market has already gone up close to 3.66% since then, right? And previously, if you still remember, during our August market update, the market actually dropped compared to June. So, and that's why at that time I said that the valuation might not be so overvalued right now because the market price actually dropped from the previous high, right? But right now, not only did the market recover, it actually went all the way up as well. So based on this, right, it can give us a good reference that if back in June at this price was already pretty overvalued, not to mention right now, right, it should be actually even more overvalued than June data point. How many of you understand the logic? If you understand, can you type U in the chat? Okay, U stands for understand. Fantastic. Okay, so this is based on Buffett indicator. Now, also let's take a look at the PE ratio of the S&P 500, which is one of the ratio that broadly used by investors throughout different parts of the world, right? So as you can see, PE stands for price, which is the overall market price, right? Divide by the earnings of the company, which right now, if you're talking about S&P 500, then will be the overall S&P 500, right? Divide by the overall earnings of those 500 company, right? So as you can see, based on this, we are also at a pretty high point, right? At about 30 times, okay? It's close to 30 times. And you can see that previously, there was a period of time that during about COVID-19 period, right? It went up above the close to like 35 times. Then the market started to drop, right? And of course, during this period of time, that was super crazy during the 2008 financial crisis, it shoot up all the way to somewhere that it's off chart, right? So that's how the market also started to drop. So right now, I would say that it's definitely not cheap at all, because we are at 30 times. Usually above 30 is considered pretty expensive. So we are definitely not cheap. And based on this, okay, we have another data point, right? And then if you look at the fear and greed index, previously it was here, remember, right? Extreme fear, it has come to this region where investors actually start to become greedy. So guys, can you tell me, when investors out there are greedy, what emotion should you be feeling? What should you be doing? Yes, it should be the opposite, right? That's how we become contrarian, and we do something that most people don't do, right? When people are very scared, actually that is the best time to buy, which is happened previously over here as well. And right now, when people become very greedy, you have to be more careful, right? You don't want to be jumping onto the bandwagon and just start to buy for no reason, right? Together with everyone, right? That's the whole point, right? So, and on top of that, if you look at the Buffett cash holding, it's almost at all-time high. Now, this is a chart that I find it's pretty interesting, because you can see that Buffett's cash holding used to be pretty high, right? Over 50% during which period of time, right? Before the 08 crisis, right? As you can see, before the 08, Buffett felt that there was nothing to buy because the market was overvalued, and that's why he held on a lot of cash. And when the 08 financial crisis actually came, when the market started to tumble down, you can see that Buffett's cash holdings start to drop a lot, right? Because he saw that the market was severely undervalued, then he bought and bought and bought, right? And right now, what happened was, with the market for the past 10 years continue to evolve like that, roughly his cash holding was hovering about 25% point around here, right? You can see, right? Roughly in up and down from about 25%. So how about now? It has actually gone up from 25% all the way to 44%, which was actually very near to the historical high mark. So guys, what do you think? What emotion is Buffett feeling right now? What emotion is Buffett feeling right now? Is he then you say run. Nice time to take profits. Yeah, indeed. Actually, Buffett took some very good profits, right? If you watch our previous market update, he sold a lot of his Apple stake. Almost half of his Apple stakes right now are gone. He took a lot of profit. He also sold quite a lot of BAC. So net seller for the past 6 months, right? And he only bought a little bit, right? Alta Beauty and all this, right? But just a little bit. But overall, he's net seller, and that's why he actually has more cash than ever, right? So guys, what's your take? Do you think right now you should be aggressive, or you should be more conservative? What do you think? You should be aggressive type A. You should think that you should be conservative type C. All right, very good. I love that. Okay, so this is how, right, we learn from this session, right? It's not that I want to give you the answer. I want you to go through this entire session with me so that you learn to make better decisions for yourself, right? How many of you felt that whatever things that we went through just now was useful for you? If it's useful, can you type useful in the chat, right? So very importantly, as an investor, we want to cultivate independent thinking, and that's how we are going through this together. Very good. I love that. Okay, so now let's continue. So the thing is, moving forward, what's happening right now, right? With the market actually at a very, very high valuation period, and we should be conservative. So what does Fed's announcement mean, right? How would that actually impact the market? And that is why right now, I also want to invite Ethan to be here, right? In fact, Ethan has been doing this market update with me for a couple of months, right? Since we started, and every single time he gave a lot of very, very useful insights to all our students, all our audience here. And right now, I want to once again invite him to be here to share with you more insights, okay? So if you guys are excited to once again welcome Ethan, can you type CCC in the chat? Okay, CCC stand for clapping for Ethan for taking your time to be here. Thank you once again for being here as well, Ethan.
Pleasure, pleasure. Thank you for having me back. How are you guys? Hope everyone's doing well. Today we got a very nice surprise by Mr. J Powell, and I'm so excited that we get to talk about it.
Awesome. Yeah, I'm super excited. Before I let you guys come in, he was already very excited sharing all his slides with me. And then I can see his passion, right? And his insights from the sharing. So right now, I want to pass the time to you.
Thank you, Chloe. Okay, so today I want to be able to dive a bit more deeper into what Jerome Powell has said because it's quite a lot of things to unpack from just one meeting. Yes, he has actually lowered it by 0.5. However, there are a lot of things that are happening in the background. So part one of my conversation, we are going to talk about the economic update. Why is the FOMC important, especially for for us in Singapore? Because it actually affects our interest rate very directly. As you can see, MAS gives out control over domestic interest rates, and domestic interest rates have typically been below US interest rates. If you look at this data, and this is a data set over the last 19 years, about 4,000 over lines of data, there has been 94.47% correlation over the last 19 years. All right. And then this is the latest banger that Mr. Jerome Powell has dropped. And let me break it down to you guys part by part. The most important thing is that number one, they have cut rates by 0.5 from an effective interest rate of 5.33 to now at 4.83 effective. Okay. And then they are also planning, as you can see over here in their projections, they are also planning for one more cut for it to go down from 4.83 to 4.53, somewhere there. All right, they're gonna do another 25-point cut. Then after that, they also has revised down the future projections from 4.1. They say that now we are not gonna keep interest rates so high for so long, down to 4.3. Which is wonderful because there will be more money in the market. Money becomes cheaper when interest rates fall. And when it's easier to borrow, big organizations will borrow more and have a little bit more leverage with their operations.
You mean they project to cut to 3.4, right? From 4.1 to 3.4 in
Correct.
2025. Okay.
Correct. So from 4.4, the last time when they were actually saying, right, they were saying they're gonna cut to 4.1. Remember you and I when we were talking, I was telling you likely they will cut the behind. However, I'm not sure whether they will cut the actual front rate. And Jerome Powell has decided to surprise everybody and take a very aggressive stance. Later, I will talk to you about what's going on in the question and answers. I watched through everything so that you guys don't have to. All right.
It should be your tagline. I watch
Yeah.
you Fed's meeting so you don't have to.
Not it is work, but it's interesting lah. Other people got K-drama. I have Jerome Powell. So that being said, I want to let you guys know on the current value. This is the very same slide, but I want to let you guys know about the current value, and then so that we can understand the economy as a whole and where is it going, especially when you guys utilize tools such as the buffer indicator that actually tracks the GDP of the country. Currently, right now, the GDP growth year on year is actually at 3%. That is a lot higher than their June projection and their current projection. They are intending for the GDP growth to taper down to 2%, but current value is 3%. Unemployment is the thing that they look at. They have a few focus in the Fed. One is unemployment. Make sure that there are as little unemployment as possible. 3 plus 4% is happy for them. Inflation over here, they are aiming for 2%. Okay, so this is the inflation right now, 2.5, but later you will see that there are actually two types of inflation. PCE inflation includes volatile food and energy. This is exacerbated by the Ukraine, all the different wars that are happening and supply chain issues. The core PCE is after they remove the volatile food and energy. So from there, we can also tell a story. We can understand the story of the economy when we look at the numbers. Okay, and these three are the things that they are looking at. So let's look at it in
Okay,
general.
so I'm very curious. So the PCE right now with the so-called the more volatile price fluctuation like energy and all this is actually lower than core PCE.
So correct. So the thing is, their PCE inflation, right? This is inclusive of food and energy. They're expecting it to actually taper down a little bit. They're
Ah,
expecting it to go from 2.5 to go down some more to 2.3. Whereas for their core PCE, they expect it to maintain, which tells us one thing, that the Federal Reserve believe that the food and energy prices may be coming down.
yeah.
And currently the unemployment is 4.2. They expect it to go up a little. Later there will be the reasons why they have decided to push down. And currently, right, because of all of this information, right, the Federal Reserve, they study all of this information to then decide what to do on the federal funds rate. And they have a process. Jerome Powell and his entourage of 11 people will sit inside the meeting room and talk for 2 days and then cast their vote. At this point of time, the market is at 5.33. And at this point of time, everybody over here has said that, okay, we want to lower it to 4.87. We want to lower it to 4.6. We want to lower it to 4.4, which is why we saw the data over here, the 4.4 over here. When you look at the 4.4, right, correct? When you look at these numbers, right, majority wins. At this point of time, they have 9 people aiming for this rate, which is why everybody decided to go towards that rate. However, once again, they take their decisions meeting by meeting, which is more apparent because when the data come out, then you can react on what to do to make sure that your dual mandate is accomplished. And speaking of dual mandate, remember we were talking a lot about inflation. In fact, in the whole year of 2024, I believe we said inflation at least 2024 times. So inflation has always been the keyword of the Federal Reserve. So let's take a look at it. What Jerome Powell say, right, is that they want to see the trend of the inflation coming down, moving downwards towards the 2% line. We look at the data for the last 5 data, okay? Last 5 numbers. Number one, it was we look at this, it starts out with 2.7, 2.7, then 2.6, then 2.5, 2.5. Yes, for PCE, we can actually see that the downtrend is quite strong. There is one additional step and then it is moving down. Whereas when you're looking at the PCE excluding food and energy, right, it's 2.8, then 2.8, then drop down to 2.6, then 2.6, then 2.6. So the chart resembles a step down rather than a downward trend. But this may be me nitpicking lah. All right. So it does not show too much of a trend going down. However, when you look into the questions and answer of the Jerome Powell's recent announcement, this is when you see this man Steve Leisman, he actually started asking, hey, in July you say you're not going to drop 0.5, then what happened today? How come it's dropped to 0.5, dropped by 0.5? And then he says the reason why they want to cut is a commitment to the public not to get behind. They want to be ahead of the curve rather than behind the curve. They want to be a bit more ahead rather than behind. So they want the inflation rate to be down, but they want their interest rate to drop also. One other, and this has been made known to them because of 2 employment reports and 2 inflation reports from the last meeting until today. And another report from the GCEW suggests that the payroll numbers are artificially high, which means the unemployment numbers are actually lower than what they actually are. So the unemployment number of 4.2 over here is actually much higher. So that said, right, that's why they actually projected their unemployment rate over here to be at 4.4%. I apologize, it's a little bit messy.
Wait, so they say it's artificially high. That means it's actually not so high, right?
Yes, correct. So it is artificially higher. So the jobs report is artificially higher. So the unemployment is the jobs is artificially higher, which
Ah.
means the unemployment is artificially lower.
Oh, okay.
Ah,
I see.
that's why they put the behind as 4.4%. All right.
Mm,
So
mm,
what I feel over here, right, is that they also have data from the Beige Book, which is a book that the Federal Reserve have access to, but not us lah. All right. So my thoughts over here is that the Federal Reserve has always operated in a dual mandate system. So their two jobs is maximum employment and stable prices. Right now, they feel that the stable prices is kind of sort of on track towards their 2% goal. And that's why they want to be ahead of the curve by cutting the interest rates now so that they make sure that the unemployment do not raise up to an unexpected, unreasonable level.
mm,
Personally, is personal opinion, my outlook in the economy is quite rosy. Number one, GDP growth is going quite well. Number two, interest rates are coming down. Number three, inflation is a lot better than last year where we have 4% inflation. Right now, only 2.6.
mm.
But my biggest fear over here is that if inflation were to creep back up, guys, everybody, I would like to ask you guys, if inflation creeps back up, we see next report, we see inflation come in. Instead of 2.6, 2.4, we straight away see a 3% inflation. Type in the chat, what do you think Jerome Powell is going to do? Raise rates for R, and then R for raise rates, L for lower rates, S for stay. Okay, so out of these three, I wonder what do you guys think? Okay, wonderful. I love this. We are having a lot of varied response. Okay, beautiful. Rate hikes again. Kaboom. RS, SL, lower, S, stay. Crash, kaboom. Okay, everybody knows that this is a problem. When inflation comes back up, right? And then they leave the inflation there, right? What happens is that inflation, people no longer believe the Federal Reserve has a control on inflation. So there's a lot of runoff effect. I tell you, this is TT, you wouldn't want to kiss Jerome Powell then. But then, right, everybody will hate Jerome Powell. And that's why, like what I say, it is a very brave move for them to cut, but it is one that I respect because they actually love the people. They actually want the unemployment not to be too high, because if the unemployment goes too high, we have a problem once again. Okay, so at this point in time, I think that everything looks great so far. However, got a little bit of a fear. So later we can talk a bit about what to choose between fixed and floating rate, and whether interest rates are going to go up, go down, and what should you even do with your mortgage. With Arigato Investor, you guys are making a lot of money, but right now I want to do the more boring task of helping you save a few tens of thousands of dollars. So yeah, let's do it. At this point in time, Chloe, I like to hear your thoughts as well after hearing my presentation for the second time.
Wow, guys, how many of you felt that was very insightful for you? It was insightful. Can you type I in the chat? Okay. To me, I learned a lot. Wow, I learned to look at so many different data points that I personally wouldn't be able to have the knowledge, but because Ethan, he watched the federal fund rate meeting so that you don't have to. That's why we are here. Thank you so much, Ethan. And
Thank
very, very factful. I love that. All right. So if we just continue to look at some of additional data points that Eden has shared just now. If you see, let's look at the inflation rate, right? So as Eden shared, right, the reason why the Fed had actually this bold move of cutting by a jumbo cut, right, 0.5, is because it does looks like our inflation rate has been tempering down, right? Like been coming down, and right now we are at about 2.5%. So then if you look at the inflation rate, okay, this is inflation rate, yeah. So if you look at the unemployment rate, it has been slowly creeping up. So I think that is why the Fed was concerned about this, and they wanted to be more, I think, forward-looking to cut rate first to spur up the economy even more, all right, having more liquidity, having lower borrowing costs, then the companies are able to employ more people if the business does well. So, but just like what Ethan said, there is a lot of tricky sentiment, right? Because if the inflation does come back up, that's when the market right now it's being greedy, but just a slight tinge of uncertainty will really send the market to the other direction, right? So that's why yesterday, after Fed actually made this bold move, the market actually didn't go up immediately. It was actually like hovering and then actually dropped a little bit. But some of you have been monitoring the market. The market right now, the pre-market is actually going up. So once again, the greed mentality is there, right? And that's why generally people will be very, very greedy right now to want to buy more. And I think that probably there will be some price movement going up from there. But if you look at generally, right, some of the indicators that we can see together. So, okay, I'm just going to look at the overall broad market, right? So if you look at the overall broad market, right now, guys, if you just look at the support and resistance, can you tell me whether is it at support or is it at resistance? Okay, so for those who know what is support and resistance, can you tell me whether is it at support or is it at resistance? Yeah, exactly. All right. So if you don't know, it's okay. All right. You just basically, this is basically technical analysis. You need to look at the chart and then you just draw out what are the high points and where are the low points, right? And as you can see, all right, this channel based on this, actually it seems to be touching a resistance. And in fact, if you look at, you draw another horizontal line, this is basically the the all-time high resistance line as well. So it does look extended. And that's why I felt that the market is also thinking about, oh, whether should they does it make sense that if they keep on buying or if they anticipate the market to drop, then maybe there will be pullback from there, right? And if you look at another indicators, recently the Safe Investor actually came up with this indicator, which I thought that was quite useful for me. All right, so I actually been looking at it as well. Let me just remove all the drawing. And if you look at the green and red arrows, right? So basically the green arrows are the points that it's good to buy, right? Because the market is actually giving you better opportunities, cheaper opportunities. So if you can see here, right, if the green arrow come up here, you buy. And then if you want to do short-term trading, like you can sell on the red arrow, right? But this is what you can do. But for myself, I'm a more like a long-term investor. I usually don't like to buy and sell, that kind of thing. So what I usually do is I like to just do dollar cost averaging over a long time, right? So that's how we can use ETF, like a simple ETF strategy like S&P 500 to compound our wealth. So what you can do is you can also use the indicator to just buy and not sell, right? So for example, you can buy here, and then after that, when a green arrow happens here, you can buy here. And then of course, when the market comes down, you can also use the green arrow to have a better certainty to average down at a better point, right? For example, here, here, and here, right? So if you've been doing that, right, during the green arrow happens, that's how overall in the long run, right, you are going to make profits in a more profitable manner, right? S&P 500 is going to give you profit regardless in the long run, but you can do this by increasing your ROI further. And that is for the green arrow side. However, if you're doing like more short-term kind of trades, be it is it like buying and selling stocks, right? Or whether is it through buying and selling away your options contract, then you can see that the red arrow actually appeared recently here, right? So if you bought a call option here, and then after that, okay, from here, you go up here, which is about 4%, right? 4 to 5% in terms of the stocks, then call options are usually 3 times or even sometimes 4 times, right? So that's how you can see like a 20% or so kind of return. Then you should be closing your options because the red arrow actually happens. So that's what I did yesterday. I went to actually close my options contract so that I can take profit early, right? Now, having said that, no indicator is ever perfect. Who knows, right? Because the market is very greedy. Maybe from then a couple may go up, right? It's also possible. But I think there's always no harm taking the profits early. Then you always ensure that you are making profits instead of when the market turns, then you end up facing losses, especially for options. It's very volatile and it's a lot more tricky because there's time decay and everything, especially if you're buying options. All right. So what is this indicator use? So this indicator is developed by the Safe Investor, right? He basically came up the script by himself. So there's different indicators that he combined together. I personally do not know the intricacy of it because he is the one who developed it, but I find it very useful. So I've been using it. Yeah, option 360 indicator, right? So that's why right now for myself, I am still more conservative because the red arrow comes out. And on top of that, just like what we saw just now, the technical analysis, just based on the support and resistance, it's also at the resistance level, right? So how many of you understand my logic, right? If you understand my logic, can you type C in the chat? Okay, C stands for conservative. Why I'm taking a more conservative stance than being aggressive, right? Because of different data point from not just the technical analysis point of view that you're looking at, but also the valuation of the market, which you have seen already, right? There are different multiple valuation methods that we look at. It's all overvalue, and you do not want to be overly aggressive during this period of time. So I think it's actually good to actually take some profits off the table so that to ensure that you are profitable and safe in this period of time, right? So the key question is then what should we be doing right now? So firstly, right, it doesn't mean that if the market is overvalued like right now, that you should be completely exiting. Okay, we don't mean that, because if you look at Buffett, did he 100% exit? No, right? He is still 50% invested. It's about 40+% cash, right? So Buffett doesn't time the market. So if the greatest investor on earth, he's not timing the market, why should we, right? So we should still stay invested. And I think you should be using Buffett way of investing as a reference. 50% invested, 50% cash. Can everybody type 50-50 in the chat? Right? So this has not changed since our previous market update. So it's always good to be conservative, especially when the market is not cheap. All right, very good. And then secondly, very importantly, is like what I said, you should take some profits. Okay, if you're already making pretty good profits from your options trade, especially those short-term trades, you should just take some profits. And for those who are holding onto stocks, you can also consider to sell some options to collect some income, right? So this is what I shared to my private ETF community yesterday, that I said that, hey guys, I'm actually now selling some options so that I can collect some additional income. And at the same time, I don't mind my shares to be called away, right? Because I already have quite a huge position. So at the end of the day, it's always about balancing your investment needs, right? Depending on, do you want to have income? Do you want to unlock more cash flow? Or do you want to actually gain back your whatever capital? Because when you actually do sell call options, you can potentially gain back your capital and you can redeploy it. So this is what I personally do for my own portfolio as well, right? So now, of course, on top of that, very importantly, is when it comes to interest rate going down from now on, right? In general, it's actually good for the market. So that's why in the long run, when you continue to stay invested, regardless of the interest rate environment, you will be okay, right? And another instrument that you should be looking at when the interest rate actually comes down is actually start with P. Okay, guys, anybody can you let me know what is the instrument that you should be looking at when the interest rate temper down? Okay, what is that what is the instrument? Start with P, make a guess. Exactly, very good. Okay, oh, you are correct. All right, that is property. Because when interest rate comes down, your mortgage, everything will become a lot more affordable to buy. So that's how it's also easier for you to finance your own mortgage. It's also easier for you to enter into the property market. So I started my property investment journey 3 years ago, about 3 years ago, and then I bought my first private condo, right? So for those who have been following me, you know exactly what is my property investing journey as well. If you're keen, you can go and watch my YouTube video and do a house tour. Now I already rented out this unit to my tenant, and I'm very happy because I get to collect cash flow. Now, the thing is, it wasn't like rosy all the time, right? Because property market, okay, firstly, why do I buy? It's because in general, the property market goes up, right? Just like the stock market, especially when you are holding long enough, it's a very, very powerful instrument that you can leverage on, because literally property allow you to leverage, right? So that's how I actually started to diversify part of my investment capital from stocks to property, just to have a different layer of safety, right? So this is the SG property market price. In the long run, it's very obvious it goes up, right? So then the thing is, when I tenanted it out, okay, initially it wasn't very, very pleasant because my cash flow wasn't positive, right? Why? Because at that time, the interest rate was very, very high, right? Which if you guys still remember, right, the interest rate start to hike and all this. And because it's a newly developed condo, I couldn't fix my rate previously. So it was a floating interest rate. And because of that, my rate was super high. I have to pay like $4,000 for mortgage every single month. So the thing is, then how much do I collect from my mortgage? My mortgage was $3,008. So if you think about it, net, I'm still losing 3,008 minus 4,000 to 4,000. I was actually losing $200 in terms of cash flow. But that is more to it. There's more to it, because on top of the cash flow being negative, I still have to pay other things, right? Including the maintenance fee, the property tax, and everything. So net, actually, my cash flow situation was actually negative $750. And it was not a very pleasant experience, because you buy property, right, thinking that you can unlock cash flow, and that's why I buy, but end up it turned out to be the otherwise, right? So I was very disheartened at first until I met Ethan, right? Because Ethan, he literally helped me to just change my entire cash flow situation. Because of him, I managed to refinance my property, right? And I fixed it at a much, much lower rate than the floating interest rate back then, right? So in the end, my installment monthly mortgage become $2,300. And then if you think about it, right, I add back in the mortgage from 4,000, drop to 2,003, right? And then with all those maintenance fee and property tax, I am still cash flow positive. And it become like $900 every single month in terms of positive cash flow. And if you add from negative all the way to positive, from negative 750 to now positive 900, I literally have $1,600 of net change in cash flow. How many of you think that this is pretty good? If you think this is pretty good, like cash flow is good for you, right? Can you type C in the chat, right? So I think very importantly, very smart, right, Ethan? So very importantly, as an investor, so you need to constantly think about what is your objective, right? If you're buying this stock for cash flow, then you use different strategies like options, or be it is it dividends. But if you buy it for, like, for example, I buy my property also for cash flow gain, right? Then it's better for me to be cash flow positive. So that's how I think Ethan has really helped me tremendously in the entire journey. And on top of that, right, eventually when I sell off my property, I can also potentially have a good capital gain, right? So that is eventually, and right now I cannot say for sure, but I think since you can look at the property trend in the long run, it goes up, it should be a good profit for me in the long run, right? So that's why I want to bring in Ethan here to be here once again right now, because he also wants to share with you exactly what kind of property mortgage and refinance or potentially solutions for you if you are probably have the same situation as me. You have a property, or maybe you already have a property existingly, but how can you refinance it better, especially with the lowering interest rate environment, right? So for those who have property, this is something very, very relevant to you. And if you don't have one yet, use it as advice so that you know what to do when you are about to buy your property. All right, so can everybody type P in the chat. P stands for property. And without further ado, let's bring back Ethan here to share with us some additional insights.
Thank you so very much. You gave me a very, very easy job. This job is to sell why is Singapore property good. And I think okay, let's look at certain facts. Yeah. Singapore, is it a big or a small country, everybody? All right. It is 726 kilometer, and not all the land we can actually build private property, right? So small, yeah, EY says small, correct. 726 kilometers square. One of the smallest 20th countries in the world. Okay. As one of the smallest 20th country in the world, this humble red dot is the second busiest shipping port in the entire world, second only to Shanghai. The airport, everybody keep howlianing. It is one of the best already. Business environment, best for 15 years. Also, Singapore is sheltered from natural disaster, got political stability, affordable, tiered tax rates, low crime rate, good education system, excellent healthcare. And on top of that, additional buyer stamp duty for foreigners, 60%. So at this point in time, you have an asset class that is very, very in demand. People want to live in Singapore for the security, for everything, and everywhere else, if you were to drive a nice car, it is a little bit dangerous. In Singapore, I think it is okay. You will be able to see like Aston Martins running around Singapore, and when they go past, you say thank you for paying super car tax. So next thing, now what I want to share, right, is our interest rates at this point of time. Okay, so let me go over to share my screen. Okay, now I want to share with you guys on the mortgage rates update, what is happening right now, what we can choose, what we should do, whether should we go for fixed rate, should we go for floating rate, what is today's SORA. I'm going to go through all of that. Okay, so as of 18 September, the SORA was 3.45. The 1 month average is also 3.45. The 3 month SORA, which means the 3 months average, is 3.55. And our job is to pick between fixed rate or floating rate. We choose the best. I am not allowed to share a lot of too many promotional. So there are some banks that don't allow me to share certain promotions. And because of that, I can't share certain things. For example, the cashback promo that everyone has been hearing about. I can't say the specific bank because they don't allow. So now, if your loan size is $300,000, your fixed rate is 2 years at 2.9. If your loan size is $500,000, your fixed rate is 2.8. If you are having a loan size of $1 million, your fixed rate is 2.7. Because your loan is bigger, the bank can actually afford to lend you for cheaper. The alternative is the floating rates, and all of them, right, is SORA plus a spread. For the 300K and 500K, no choice. You have to take the 3 months SORA, the 3 months average. But for the $1 million, you can choose to take 1 month SORA or 3 months SORA. So in an environment, guys, where interest rates are coming down, okay, so your newer data is going to be lower and lower and lower. Do y'all want to be assessed by a 3-month average, which means it takes a while before your lower interest rates start to reflect, or the 1 month average, where it will be faster, albeit more volatile? Everybody type in which would you want to pick, 1 month or 3 months, 1 or 3 in the chat right now. 3, 3, 1, 8, 1, 1, 1, 3, 1. Okay, wonderful. 3, Michelle. Okay, Michael. 3. Okay, 3. Excellent. Okay, so 3 months does give us stability. However, if it's going down, you want the average to be as small as possible. So you should actually take the 1 month SORA so that it is an average of 30 data rather than the 90 data. If it's 90 data and then your recent data drops, right, it will take a while before, like it will take about 45 days for it to come into the average. So I would recommend the 1 month, but that is only available if you have 1 million and above. All right. But more importantly, how important it is for us to choose the right rate. As you can see, right, today we talk about $1 million. Just now we said the floating rates, right, is 3 months SORA. It is SORA plus 3% plus 0.4%, which will give us 3.85%. And if you were to go for the fixed rate, right, you'll be looking at a 2.7% for a $1 million loan. Okay. Every month, right, instead of paying $3,000 for your interest, you are paying $2,000. The difference is approximately $950 per month. So you can go on holiday every single month if you got this correct. All right. And then over 2 years, it is about 20/1000. So this is where we want to make our decision as properly as possible with as much research as possible to then choose the rates that are better for you. Okay. So who are we? We are Unbeatable Mortgage. We specialize in bank loans. We are one of the few people in Singapore that has the Singapore accredited mortgage planner. We've got 4.9 stars on Google. We are partnered with all of the banks in Singapore. So if you come to us, we will bring you to every one of them, the ones with the best rate actually. So we have strategies to help you get the best rate with avoiding as much fees as possible. Fees such as, like, if you were to sell your property during the lock-ins, well, the fee very expensive, 1.5% of the loan size. Okay. So we have a proven method to be able to help you get the best out of your mortgage, which is our framework of strategy, structure, and rate. Strategy, when you want to sell. Structure, how you're going to hold. And rates, what to take. Okay. That being said, let's go into mortgage introduction. For most of you, I believe you all have already heard already. But for the newer comers, I would like to just share with them what I know. So your home loan, you can take up to 75% of your home. All right. And you're able to choose between fixed or floating rates. Your monthly installment, right? For example, just now, Chloe said that her mortgage was $2,350, right? Not everything goes into interest. There is the principal that gets paid down because you pay for your mortgage. And over time, as you slowly pay, your principal goes down, goes down, goes down, goes down, and eventually you own the property in full. And just now, you also hear that her rent is $3,800. So can I ask everybody, do y'all want to buy or do y'all want to rent? If you want to buy, type B. If you want to rent, type R. Okay. So this is also one of the only loans that can be paid back by CPF ordinary account. All right. So because of that, it's one of the lowest rate possible. Chloe, buy already. Michael, buy. Okay. So who will pay for my service? For your community, Chloe, I've already said I'm going to let you guys have my service free, but we'll talk about that later. Okay. This is the only loan that can be paid back by CPF ordinary account, and because it is one of the more secured loan, the interest rate is one of the lowest. If you minus away inflation, right, it is really lesser than 1%. All right. So at this point of time, so we know that the correlation is 94.47%. What we are going to talk about is some forward-looking statements. So everybody, please, I am just a human like everybody. We cannot look past the fourth dimension of time. We cannot predict the future, but with enough data set, we can try. All right. So what happens is, with that being said, let's talk about my projections. So
Okay, so Ethan, before you talk about projection, right? I think some of our audience are new. Can you explain what is SORA?
okay, SORA is the Singapore overnight rate average, which is a very universal rate in Singapore, which is regulated by MAS. There are other rates, there are floating rates out there that are regulated by the bank, but what we want to look at is the MAS regulated rates because it actually is more transparent over here. Okay, so Did I answer your question, Chloe?
Yes, yes.
Excellent. So that being said, currently our effective federal funds rate is 5.33 and our SORA rate is 3.45. As the 5.33 gets cut over at the end of this year to 4.4, we are going to expect SORA to move from 3.45 to 2.85. Okay, so if you were to get a mortgage right now, you should be projecting these rates for your floating rate because you will only get your loan in about 2 to 3 months time. So you will take this as your starting range, and then after interest rates get cut another 4 more times in 2025, it will once again drop from 2.85 to 2.2. So this is when we can then use this to try to calculate which is better for you. So I've already done the calculation so that you guys are able to see. I have broken them down in terms of the current interest rate, and you will see 2.92 and 2.44, which are weird numbers, but what they are actually is the average of these two plus the spread. So average plus spread, average plus spread. Okay. So year one, what's going to happen? Year one, you will be paying 2.7. If you were to go on the floating rates, you would be paying 2.92. So this is where you actually save approximately 2 grand. 2.1 there about. And on the second year, right, this is when interest rates drop already. The average, right, interest rate at 0.4% spread is 2.44. So year one, you save 2.2. Year two, you have to pay extra 2.6 if you were to pick fixed rate. The difference between them is about $400. Okay. At this point of time, okay, at this point of time, based on these two rates, I know that the premium for the fixed rate is $397. But in this uncertain market, right, I actually think the $400 is quite a good price to pay for stability, peace of mind, and if interest rates go up again, we are already locked in. So, Chloe, what do you feel about this?
Oh, okay, interesting. So I'm trying to understand your perspective. Since despite the fact that if we fix the rate, right, which is right now at about 2.7, right, for 2 years, technically it's net $397 so-called pay more as compared to floating, right? If the interest rate does drop. However, if the interest rate actually start to pick up, which could be because the inflationary environment is still quite uncertain, you feel that this $400 is worth paying because the premium, it's like buying insurance in case actually the insurance in case the insurance needs to kick in case the inflation actually pick up and the interest rate instead of dropping actually goes up. Is that what you mean?
Or don't drop as fast. A lot of permutations may happen. I think this is a more like a hedge downside kind of situation, especially when you're looking at 2.7. You 2.7, you minus 2% for long-term inflation rate. You're looking at 0.7. So I think
True.
I think it's quite a good deal in my opinion. But there are a lot of people with different risk appetite. There are people who are financial minimalists that want to just simply get the fixed rate and be done with it, and some people who are more speculative that wants to go into the floating rate. At this point of time, it is a very interesting time. Like I said, this is the first time we don't have a very clear answer. Last few projections, the answer was so clear, so the data was quite concise whether to go for fixed. But at this point of time, this is where the lines are a little bit blurred.
Okay, so then I think we shall also ask our audience. So what would you guys do if you guys were to refinance a property, or right now if you are in this situation, would you consider buying this as an insurance, so-called like $397 as an insurance to lock in, or would you want to take the chance that, oh, maybe interest rate really can come down that quickly, then you actually end up saving, right? So LS will take a risk. If you want to take a risk, type R. If you want to be more conservative, type C. Okay, so Katie want to be conservative. Janet wants to be conservative. Okay, Michael, very good. I think so. At the end of the day, there's no right or wrong answer. But I will usually, for myself, because I cannot anticipate interest rate environment as well, I will usually just follow experts' advice. So in this case, if Ethan think that it's better to stick on the conservative route, I will generally go with that the conservative route because it makes sense to leverage on his own experience. But different people are different as well. Yeah. So I think Ethan, at the same time, some people are asking, oh, so how would you get paid for your services since you are already like doing all these calculation for your clients and all this?
So personally, you can think of me as a banker without a bank. What I do is I do not have any loyalty to the banks. I've got 10 of them. My loyalty is usually to my clients, which is why I really enjoy my work. My clients really, they have a nice conversation with me. I try to save them as much money as possible. And yeah, and the bank actually does pay me a referral fee. They don't pay me as well as they pay their own bankers, because their own bankers will have a lot more commitment to the bank, whereas I am a free agent. So this is how I get paid. For more complicated cases, normally we do charge for like credit bureau repair and whatsoever. But for your community, right? Arigato. Anyone that needs this, come to us and say arigato. Straight away, I will get the code, and then I will not charge you guys what I normally do, which is $1,000 to $3,000 for more complicated service such as credit bureau repair, or showing the right documents, or a lot of other not
Complicated cases.
complicated complicated and interesting cases that cannot be publicly shared.
I see. I think people are already saying arigato to you guys already.
Arigato.
You and your team, I think like super amazing. Okay, so for those who are wondering how to get in touch with Ethan and his team, who are all very professional to able to help you to look at your financial situation based on your own current mortgage, property issues, and all this. And if you have some additional complicated things that cannot be simply addressed by most of the banks out there, they can also be there to assist you, right? Because they can really look at the one-to-one case-by-case basis. And just like what Ethan said, usually if you have like complicated issues like this, it's very difficult for you to already get loans like mortgage loans out there, but they will be able to assist you, right? So instead of generally they do charge, because from my understanding, because these require a lot more work, a lot more liaising with the banks and all this, but because you guys are here, right? So that's why I think we should say arigato to Ethan, right? So that's why he and his team is able to give you this really complimentary and help you to just really unlock more cash flow, refinance, and probably remortgage better as well. So all you need to do, just scan this QR code, and or you can go to rebrand.ly/unbeatable mortgage, which is actually Ethan's company as well, and just fill out the form. All right. So submitted the right document. This is where Ethan needed. Yeah, exactly. All right. So yeah, so all you do is go there, but let me just quickly share the link as well inside the chat so that you guys know what exactly are some of the information that you need to provide to Ethan via the form first, so that they can assist you better as well. All right. So I think one thing amazing about Ethan and their team is basically his team is like they don't make money from this, right? They don't make money from like consulting you, like and all this, but the actual thing is they only will make money if they really manage to successfully help you. I think that is the most important thing, because the fees are not paid by you. The fees are once they manage to find the best solution for you in terms of refinancing, mortgage and everything. Once they found the best deal, then once you decide to proceed with the recommendation and advice given by them, then the banks are going to pay them. for their services. So you don't pay any single thing from there. It's just like what happened to me back then. I don't pay a single cent to Ethan, right? Because he gave me as a complimentary service. And in return, the banks will reward him for bringing me as a client. And a lot of times, one thing very interesting is if you go to the banks yourself, you will not be able to get the same rate that Ethan and his team is going to get you, because they have a lot of relationship with the banks, a lot of things that, because he used to be actually from one of the big bank in Singapore, he has worked there for many years. He developed very good relationship with the banks, right? And that's how when he came up to do this on his own, he has a lot of connection and a lot of better deals than we normal customer who walk into the bank will not give it to you. Right? So you actually will have more savings when you actually have him and his team to help you, right? So what you need to do, once you come into the form, just fill up your personal contact information so that they can contact you, and do let Ethan and his team know what is your current help that you need, right? Do you need a new loan, a refinance, or reprice, right? Or others like complicated issue, please write out here, okay? So that they can prepare better as well. And then basically they will give you a call, right? So make sure you just select the date that you prefer, and then what is the preferred time for the call. Then they can jump on the call with you to find out a lot more about your personal situation, so that they can see how they can advise you from there. All right. So, yep. Okay. Very good. Any questions regarding Ethan's mortgaging issue? If you have any questions right now, feel free to ask. Okay. Since we still have, I think actually we already overrun. Okay. But we just want to make sure we satisfy everybody's questions as well. Okay. So feel free to ask it here.
Okay,
Okay.
I want to take one question.
Sure.
One actually statement lah by Maslan. Maslan actually talks about the Sora, and yes, it is a benchmark that everybody use, and that is one thing that MAS use. To share a little bit more, you can actually go into the level of predicting where Sora is going to be for this particular date. Let me share. Okay.
So do you need to overtake my share screen?
Yes, please.
Okay, can. Let me just unshare first. Okay, there you go.
So yeah, 1 second. This one salah share. Oh yeah, correct share. Are you all able to see this current MES slide? MES?
Yeah, if you can make it bigger would be better.
Okay, so this is the MES website for where the interest rates are today. As you can see, right, they already show you only up to 18. Today's interest rate have not been totally out. Okay, so how to predict Sora, right? You actually see how much MAS takes for depositing. So if you got extra money, you want to pass to MAS as a establishment, for example, like a bank or something, they will give you the deposit rate. For today, they will give you 3.08. And if you want to borrow from MAS, they will actually be charging you 4.08. So between got 1% spread. And if you realize, right, most of the time the Sora falls in between these two. So this actually helps with this actually helps with understanding what's the next number going to be. Next thing is, just now when you were talking about the when I get paid, right? So our team only get paid when you get a new loan or you were to refinance to move to a new bank. However, if you stay within the bank, right, this is known as a repricing. The reason why I want to show you my reviews page is later you guys can take a look at it lah. Okay, 4.9 star.
Can you make it bigger?
Try. Oh, sorry. 4.9 star, 119 review. But most of sometimes, right, you will see that I am a person that not afraid to share about repricing, because in Unbeatable, you come first. Pun totally intended. So yeah.
You come first. Yeah, exactly.
Come
Yeah.
first,
So,
in Unbeatable, you come first. Yeah.
yeah. So what Ethan is saying that he will really advise based on the best situation for yourself, right? Because when it comes to repricing, the banks don't pay them, because you are repricing means you are currently taking this loan from the current bank and you are basically just repricing within the same banks. The banks will not pay Ethan and his team. So generally, if you engage some additional mortgage broker out there, they won't want to you want you to do that because they don't get paid, right, at all for their own services. But the thing is, for Ethan and their team, they just want the best interest for their clients, and that's why if repricing is the best model for you, they will just ask you to go and reprice, right, so that they can help you to unlock more cash flow as well, right? Then obviously, if they can find better plan from other banks, they will